Welcome to a new video where we delve into the world of finance and investment. Today, we're going to talk about something that's been making waves in the financial markets. Exchange-traded funds, or ETFs. These are investment funds traded on stock exchanges, much like individual stocks. Our focus will be on three specific ETFs that have been performing exceedingly well: UNG, RING, and ARKG. Each of these brings something unique to the table, presenting investors with a range of opportunities to diversify their portfolios and potentially generate significant returns. For those of you who may be new to this, ETFs are a type of security that involves a collection of securities, such as stocks, that often tracks an underlying index. They're a great way to invest in a broad market sector or industry without having to buy individual stocks. Stay tuned as we explore UNG, RING, and ARKG. This journey is bound to be insightful, so buckle up and enjoy the ride. Thanks for tuning in, viewers. If you're finding this content valuable, there's so much more to come, filled with even more amazing tips, tricks, and inspiration. Make sure you hit that subscribe button to stay connected with us and never miss out. And while you're at it, drop a comment below and share this video with your friends. First up, let's talk about UNG, or the United States Natural Gas Fund. This is an exchange-traded fund, or ETF, that is designed to track the price movements of natural gas. For those who might not be familiar with financial jargon, an ETF is a type of investment fund and exchange-traded product traded on stock exchanges. UNG does this by investing in near-month natural gas futures contracts on the New York Mercantile Exchange. Now, let's delve into a bit of history. UNG has been around since April 2007, providing a direct way for investors to gain exposure to the price of natural gas without the need to hold the physical commodity or deal with futures contracts directly. Over the years, it's seen its share of ups and downs, much like the commodity it tracks. However, it's important to note that natural gas is a commodity subject to seasonal price fluctuations, and UNG's performance often reflects this. Why is UNG a good buy now, you ask? Well, there are several reasons. First, the demand for natural gas is on the rise globally, with countries turning to this cleaner-burning fossil fuel to meet their energy needs. Second, advances in technology have made it easier and more cost-effective to extract natural gas, which could potentially lead to higher profits for companies in this sector and, by extension, for UNG. Moreover, UNG can also serve as an effective hedge against inflation. With central banks around the world printing money at record rates, many investors are seeking out assets that can hold their value in the face of rising prices. Commodities like natural gas can often fit the bill. So, in a nutshell, UNG offers a unique opportunity for those interested in the energy sector. It allows you to invest in the price of natural gas without the need to deal with the complexities of futures contracts or holding the physical commodity. And with the current upward trend in natural gas prices, now could be an opportune time to consider adding UNG to your investment portfolio. Next, we shift our focus to RING, the iShares MSCI Global Gold Miners ETF. This exchange-traded fund, or ETF for short, is designed to track the investment results of an index composed of global equities in the gold mining industry. Perhaps you're wondering, what makes RING stand out among other ETFs? Well, RING holds a unique position in the market by offering exposure to companies primarily engaged in the business of mining gold. This is an industry that has historically performed well during times of economic uncertainty. Let's take a brief journey through time. Since its inception in 2012, RING has demonstrated a robust performance. Despite the volatile nature of gold prices, the fund has managed to deliver consistent returns for its investors. This is largely due to its focus on gold mining companies, which tend to benefit from rising gold prices. Now, why should you consider adding RING to your investment portfolio? There are several compelling reasons. First, investing in RING allows you to diversify your portfolio and hedge against inflation. This is because gold is often viewed as a store of value during inflationary periods. Second, RING provides exposure to the global gold mining industry. This means you're not just investing in one company or one country's gold industry, you're investing in a collection of gold mining companies from around the world. This global diversification can help mitigate risks associated with investing in a single market. Lastly, with RING, you're investing in a sustainable future. Many of the companies within RING's portfolio are committed to responsible mining practices, ensuring the environmental impact of gold mining is minimized. In conclusion, Ring offers a unique opportunity to invest in the global gold mining industry. It provides a way to diversify your portfolio, hedge against inflation, and support responsible mining practices. For those looking to add some sparkle to their portfolio, Ring is a solid choice. Last but certainly not least, we have ARKG, or the ARKG Genomic Revolution ETF. Diving right in, ARKG is an ETF, that's an exchange-traded fund, that focuses primarily on companies within the genomic industry. These are companies that are pushing the boundaries of what's possible in the healthcare sector through advancements in areas like gene editing, targeted therapeutics, bioinformatics, molecular diagnostics, and more. ARKG has a strong performance history. Since its inception, it has consistently outperformed many of its peers in the healthcare sector, despite periods of volatility, which are to be expected given the innovative and disruptive nature of the companies it invests in. ARKG has proven to be a strong performer over the long term. Now, why is ARKG a good buy right now? Well, the genomic revolution is just getting started. We're standing at the precipice of a new era in healthcare, one where diseases that were once considered untreatable could become a thing of the past. It's an industry that's set to grow exponentially in the coming decades, and ARKG offers a way to gain exposure to this exciting field. But it's not just about the potential for financial gain. Investing in ARKG is also about investing in a better future. The companies in ARKG's portfolio are working tirelessly to improve human health and longevity. They're creating therapies that could potentially cure genetic diseases, developing tools to diagnose illnesses earlier and with greater accuracy, and pioneering new methods to personalize medicine. In a nutshell, ARKG offers a way to invest in some of the most innovative companies in healthcare. Companies that are leveraging the power of the genome to revolutionize the way we understand and treat disease. Remember, investing always comes with risks, and it's important to do your own research and consider your own financial goals and risk tolerance before making any investment decisions. But if you believe in the potential of the genomic revolution and want to invest in the future of healthcare, ARKG could be a great addition to your portfolio. ARKG is the ticket to investing in the future of healthcare. Now that we've looked at each ETF individually, let's compare them. UNG, Ring, and ARKG. Each of these ETFs brings something unique to the table. Let's start with UNG, the United States Natural Gas Fund. It's a commodity ETF that provides investors with exposure to natural gas. As we move towards cleaner energy sources, natural gas is often seen as a bridge fuel, and this makes UNG a compelling option. It's a great way to gain exposure to the energy sector without having to pick individual companies. However, commodity prices can be volatile, so it's important to keep that in mind. Next, we have Ring, the iShares MSCI Global Gold Miners ETF. As the name suggests, this ETF provides exposure to companies involved in the mining of gold. Gold has traditionally been seen as a safe haven in times of economic uncertainty. Therefore, Ring can be a good choice for those looking to add some stability to their portfolio. But remember, the performance of this ETF is closely tied to the price of gold, which can fluctuate due to various factors. Finally, there's ARKG, the ARKG Genomic Revolution ETF. This ETF focuses on companies that are involved in the genomic revolution. Think gene editing, targeted therapeutics, and other health innovations. The genomics sector has the potential to be a game changer in the medical field, and ARKG gives you a way to be part of that. However, it's also worth noting that this sector is relatively new and can be risky, with many companies still in the early stages of their development. So, why are these three ETFs a good buy now? Well, UNG provides a way to invest in the ongoing transition to cleaner energy sources. Ring offers a hedge against economic uncertainty, and ARKG gives you a stake in the exciting field of genomics. But it's not just about the sectors they represent. These ETFs have also shown solid performance. UNG has benefited from rising natural gas prices, Ring has leveraged the strength of gold as a safe haven asset, and ARKG has capitalized on the burgeoning interest in genomics. Ultimately, the choice between UNG, Ring, and ARKG depends on your individual investment goals and risk tolerance. Are you looking for exposure to the energy sector, a hedge against uncertainty, or a stake in a groundbreaking field of science? These are the questions you'll need to answer. Remember, investing always carries risks. It's important to do your own research and consider seeking advice from a financial advisor before making any investment decisions. Whether you're interested in energy, gold, or genomics, there's an ETF for you. We've covered a lot of ground today, from natural gas to gold to genomics. It's been quite the journey, hasn't it? We've explored the potential of UNG, an ETF that allows you to tap into the buoyant world of natural gas. We've dug deep into UNG, an ETF that shines with the luster of gold mining companies. And we've delved into the fascinating realm of genomics with ARKG, an ETF that's all about revolutionary biotech breakthroughs. These three ETFs, each unique in its own right, present a compelling case for diversification. With UNG, you get exposure to a commodity that's fundamental to our energy needs. UNG, on the other hand, offers a hedge against inflation and economic uncertainty through its focus on gold. And ARKG, well, it's your ticket to the future, enabling you to invest in companies that are rewriting the rules of biology. Of course, we've only scratched the surface here. Each of these ETFs has layers of complexity and potential that merit a deep dive. Remember, investing is not a game of chance. It's a game of knowledge, analysis, and strategy. It's about understanding market trends, assessing risk, and making informed decisions. So we encourage you to take what you've learned here and delve deeper. Do your own research, consult with financial advisors, and make sure any investment aligns with your financial goals and risk tolerance. Whether you're new to investing or a seasoned pro, these ETFs offer intriguing opportunities. But don't just take our word for it. Go ahead, explore, analyze, and make your move when you're ready. After all, the world of investing is as exciting as it is challenging, and the rewards can be truly phenomenal. If you found this video helpful, please give it a thumbs up, subscribe to our channel, and share it with your friends. Until next time, happy investing.